Hi everyone, thank you so much for joining us today out there in the internet land and in here. And if you're watching later, thank you so much for clicking on our video. My name is Sokha Yous. I'm a financial wellness counselor with Mayo Employees Federal Credit Union. And today we're going to talk about year-end financial checklist. I know it may seem like the year flew by so quickly. So we're here already, and last year we had one, and the year before that too. We talked about year-end financial checklists. So if you have any questions, anytime during the presentation or even after the presentation, you're more than welcome to interrupt the presentation, or you can send me an email. This is my contact information. If you can't reach me here, if you can't write this down now, you can always go to our website, MayoEmployeesFederalCreditUnion.org, and just go to the financial education tab, and my contact information will be on there. So today, again, we're going to talk about year-end financial checklist. We're going to talk about reviewing your credit report, organize your finances, review your insurance policies, prepare for taxes, and budgeting. What does budgeting look like for you for this whole year? What is it for you for year to date? What does it look like for you to go into 2026? So as 2025 draws to a close and excitement builds over planning, holiday planning, celebrations with family and friends, you should have one more thing on your holiday to-do list, and that's to review your year-end financial checklist. While it's coming to reflect on what you've accomplished and where you're headed, personally, professionally, and financially, here are some of the essential personal financial things to do to help wrap up your year and prepare for the one ahead. First on the list is always to review your credit report. You just want to make sure that everything on there is accurate, and that there's nothing on there that's fraudulent or that's inaccurate. On there, things to check out for is your names. If you recently had a name change, make sure it's on there too. Your addresses, your phone number, and your employers. And really make sure that everything that's listed on the credit report is accurate. If there's any late payments, is it accurately reported? Is it actually late, or can you dispute this? Something to know also is understanding your credit score. So here's a little picture that shows you what goes into your credit score. So 35% of your credit score is made up of your credit history. 30% of your credit score is counted, amounts owed is counted towards 30% of your credit score. 10% is new credit, 15% is length of credit history, and 10% is credit mix. So we always want you to, again, check for frauds and errors. So dispute any fraudulent activities if you do see any of them on your credit report. They're fairly easy. So if you go on annualcreditreport.com, as stated here, you can, and that's a free website, by the way. You don't have to make any payments or anything. It does not show your credit score, but it gives you your report from the three major credit bureaus. That's the Experian, TransUnion, and Equifax. So what do you do if you actually see something fraudulent on your account or something that you disagree? You can actually just dispute it on each individual website. So you can go to Experian.com, Equifax.com, TransUnion.com, dispute it, or and they'll give you a list of reasons to dispute it, right? And then they'll contact you by email or by mail, by physical mail, however you want to be contacted. And if you find yourself that you have, if you have any questions or you need help doing that, you're more than welcome to reach out to me. I'll be more than happy to help you work through that. So also, we just want to make sure that things are reported accurately. So again, if it's showing late payments, but you made the payments on time, you have proof that you made the payments on time, by all means, reach out to them, let them know. And also reach out to the creditors too, directly. So you should always dispute it with the credit bureaus first, and then reach out to the creditors and let them know, hey, I disagree with this report. I made that payment on time. Can you review your records? I can show you what I have for my records, and then if you can update it with the credit bureaus accurately too. And if it's a legitimate dispute, if it's legitimately reported late, and it was their error, then they'll go ahead and reverse it. So because it's their responsibility to report it accurately. Again, if payments, as stated earlier in the pie, 35% of what goes into your credit score is made of your payment history. So again, it's really important to pay your bills on time. If you miss the payments, or if you find yourself, getting a little behind, you think you're not going to be able to make this month's payment, reach out to the creditor directly. I was in collections for a long time. I worked in collections for about 16 years, and I really appreciate when people reach out to us and let us know, hey, you know what, I'm having some financial hardship this month. I'm wondering if there's some sort of different payment arrangement that I can do this month. Can I move it to, pay half this month and then pay the other half next month? But it's also really important that you understand how that affects your credit score, how we have to report that. If I can only pay half this month, are you going to report that I'm paying late, or are you reporting that I'm paying on time, even though we have an arrangement to only have me pay half of the payment this month? So it's really important that you ask these important questions, okay? It's important that you don't wait until it's too late. So the sooner you find out what's going on with your finances, the better. And just reach out to them, let them know that you need a different kind of arrangement. And then new credit, remember that makes up of 10% of your credit score. So you want to limit new inquiries, especially around the holiday time. Around the holidays, they usually, when you go shopping, they always offer you, if you open up a Kohl's credit card, you can save 30% of your purchases today. So that's really enticing. But just remember the implications after that. It really affects your credit score. One, you're going to get a hard pull on your credit report, so that it brings down your credit score by a few points. Two, you're opening a new credit line, so that shortens the lifetime of your credit history, so it really affects your credit score then too. And three, if you're not prepared to pay for your Christmas shopping with the money that you have saved up or the money in your checking account now, putting it on a credit card is risky, because then what if you can't pay off the entire balance, or what if you have to carry the balance from one month to another, and knowing that the interest rate is going to be very high, so that's a little bit riskier too. So if you apply for and open new credit accounts, only as needed, and then have credit cards. If you do have credit cards, you want to manage them responsibly, of course. And it's really important that even if you close out old accounts, it doesn't make the account go away. Just make sure you pay off the entire balance first. And it's really important to keep the older accounts open, because it extends the length of your credit history. Capacity, remember, that makes up a 15% of your credit score, so credit utilization. If you have, so we tend to tell people to stay under 30% utilization, which means if you have a credit card limit for $10,000, we don't want you to go over, it's best to not go over $3,000 on that credit card. It shows that you have the willpower to not spend the entire balance, or not to spend the entire credit line. It shows that you have a way to pay your credit cards back and have other sources of payment too, instead of using just that one credit card. So it's really important that you pay down high balance credit cards and revolving debt, so that way your credit utilization can be lower too. The lower your credit utilization, the better your credit score. You want to pay off debt rather than moving it around, and then just use caution when closing older credit cards too. So again, length of credit history, that makes up 15%, 10% of your credit score. So it's the age of your oldest account and average age of, it's the average age of your oldest account and your newest account together. So you want the length of your credit history to be as long as possible, because it shows that you have experience and history and how to deal with different cards, right? Different credit cards, different credit lines, things like that. Do not apply for unnecessary credit cards, again, and use caution if you're opening a new credit card to transfer balances. Of course, we wanted, the importance of having a credit score. It's really, really important that everyone understand that their credit score is really important in the financial world, of course. It helps you, get a mortgage, get a car loan, get personal loans, credit cards, things like that. The better your credit score, the lower your interest rates in all of these products. The lower your interest rates, means that the less money that you have to pay each month, right? The lower your monthly payments will be. So the lower your monthly payment will be, then the more money you'll have in your pocket to put towards other financial goals in your life. Places that uses your credit score, like when you're trying to rent an apartment, obviously when you're trying to buy a house, when we have to run your mortgage, when you apply for a mortgage loan, we of course have to run your credit score. Employment, certain employers look at your credit score too. Car insurance rates, premiums, they really look at your credit score too. So after your driving history, the number 2 factor is your credit score. So if you find that, if you got with an insurance company a couple years ago, your credit wasn't as good, but you've been working on improving your credit score, and it's now at, a lot better than it was a couple years ago, you might want to reach out to your insurance company and see if they can rerun some new rates for you, or see if you can go with a different company too, and see if they can give you some offers to lower your car insurance company too, because your credit score is better now. And second on the list, we're going to talk about organize your finances. So you want to gather information, all your checking accounts, savings account, credit cards, loans, investments, and retirement accounts from former and current employers too. So we have, it's really important just to organize your financial documents all in one spot. So if you just have a folder or a binder or something to put all of that information on there, that's wonderful. Whether it's a computer folder or an actual physical folder. So look into retirement consolidation if you have multiple. So there's some people that I talked to that said, what do I do with my old employer, 401k or 403b, and I have this one with Mayo or this one with my current employer. Go ahead and combine those together if you can. All you have to do is just reach out to your employer if you don't have access to the retirement accounts. Reach out to your old HR and just ask them, hey, who did I have my 401k with? Who did I have my 403b with? And then reach out to them and see if they can consolidate all your retirement accounts together. Have an organized list of accounts all in one spot. Review your beneficiaries in all of your accounts. You know, that includes your bank accounts, your life insurance, your retirement accounts. That includes your work life insurance too. So just make sure that you update that if you recently had, a marital status change. You want to review your credit cards, your loans, and your bank accounts just to make sure everything is correct on there. There's no fraudulent activities, and kind of know, what kind of interest rates you're getting on your credit cards, loans, and things like that. Because if you've been working on your credit score and you find that this year your credit score is the best it's ever been, you can always call those companies and try to negotiate your interest rate too. Or try to get a loan to consolidate all your credit card debt if that's the situation you're in. You should review your subscriptions each year too. So things like Microsoft sneaks up on me every year in January. Your Ring camera subscription, other yearly subscriptions that you may have, or every 2-year subscriptions. Is this the year where you have to renew your nursing license? How much is that for the year? And different your card tabs, you pay your property taxes, your homeowner's insurance. Do you pay that every month, or do you need to review other things too? So just review a lot of those yearly things that kind of sneak up on you. So this is a budget spreadsheet. Excuse me. This is a spreadsheet where I have where I can send out to people to, when they meet with me on budgeting or whatever it may be. I like to have people just put all their financial information all in one page, right? Just so it's easy access for you. Going back to the other slide where I was talking about putting all your financial information all in one page for easy access. There's information loaded on here, but it doesn't belong to anyone. It's something that I made up, but it's just to set as an example of what should go in here. So if you're interested in this, you're more than welcome to reach out to me. I can send you this sheet, or I can send you the entire budget spreadsheet, budget book. So here an example with banks and credit unions. You can put the institutions, the name of it, the type of accounts that you have, the bank routing, checking account number, if you want to put that down there. And with each account you have to put down beneficiaries, so it's maybe perhaps important to write down who the beneficiary is or are for that account or those accounts. And then update it if you need to. If you're comfortable with username and password, you're more than welcome to add that on there. Investments account, list all your investment account, retirement accounts, assets, credit cards, and loans too. So it's, just in case something happens to you, your significant other, or someone, next of kin knows which accounts that they need to reach out to about whatever happened, right? So, but if this is part of your New Year's resolution, just to organize all your finances, something like this would really help you organize your finances too. So again, this is free. I can just email it to you if you reach out to me. And what should you review, right? Again, beneficiaries, life changes, add or edit your list, debt interest rates, your credit cards, your loans, asset interest rates, your high yield savings account. Is there another savings account that has a higher rate of return? Do you need to move that around? Money market, investments, and retirement accounts, you can review that too and figure out how much you're getting back for the year. Do you need to move accounts for better returns, or do you need to move financial institution to avoid monthly or yearly service charges? And again, with service charges, with credit cards, review that too. What is American Express charging you this year, or what is Capital One charging you this year? Is it $300 for the entire year? Is it $100? Do you need to switch over to a different credit card that's not charging you a yearly fee? You want to adjust your contribution based on your budget and goals. So once you figure out, what your financial goals are for next month, for next year or for the next couple years, you can adjust your contribution to your 403B just to better fit your lifestyle for this upcoming year. And subscriptions and memberships, cancel any unused ones or pause for the season. Cell phone plans, compare costs, pay off contract, change plans if it'll benefit you. Streaming services, cable and internet, you can evaluate the usage you can cancel or update subscriptions if you don't use them, again, for the season if you need to. And then we'll move into review your insurance policies, ensuring your home, renter's insurance, health insurance, car, and life insurance policies are up to date with enough coverage is more important than ever, especially, if you have changes in your family size, changes in marital status, it's really important to update all of that. If something happens to you today, will your family be covered? How long will they be covered? Will your funeral expenses will be covered? So it's really important to review all that too. Something happens to your home, do you have enough coverage for your house? What is included in your homeowner's insurance? What is the deductible for your homeowner's insurance for different claims? What is the deductible for your car insurance for different claims too? So it's really important that you understand all that too. So it's not fun. It's not really a fun thing to do, but it's really necessary to address those things, right? Your health insurance, is it enough to cover you and your family? Do you need to add someone else, on there too? Health insurance, you added dependent on your health plan. I know open enrollment closed already for Mayo and it closed for us too. So it's, are you expecting a new member? Are you expecting a baby or adopting a child next year? You can include that in your, include them in your health insurance too. You can adjust income for changes when adding dependent. Understand your deductibles is really important. What is your out-of-pocket max for you for one person? What is the out-of-pocket max for you to pay as a family? Do you have that available in a savings account and high yield savings account somewhere where you can cover those deductibles? Do you have enough in your flexible spending account, in your health savings account? Do you have all of that? Do you have that availability on those in those accounts to pay for deductible if need be? Do you have enough in your savings account for deductibles, what I just said there, and also, it's really, really important to review what your employer has available too. So the health reimbursement account through your employer, understand how that works too, and what will they reimburse you if you need to get services done. Car insurance, adding a driver to your policy next year, how much is that going to go up? Do we need to meet to set up a budget for, your car to anticipate your car insurance going up next year? Do you need to put a driver into driving school? If you need to meet about that, we can certainly do that and set up a budget. Life-changing events like buying a house, getting married, if you've improved your credit score or driving history can impact your insurance policy too. You can shop around for the best plans and the costs. Know your deductibles and coverage outline your policy, especially during the winter time. Do you need to lower your deductible a little bit just so you and increase your coverage a little bit more? You can reach out to your insurance, provider and see what they suggest. There are some people that increase their coverage during the wintertime and then and lower their deductible during the wintertime, and then when it comes to the spring or summer, they lower their coverage and they increase their deductible, so that way their monthly payments will be a lot lower too. If you find yourself in this situation, you're more than welcome to reach out to them and see what's best for you and your family. And do you have enough in savings for the deductible if something does happen? Homeowners and renters insurance, what do you consider? Do you have enough coverage? You should review this annually or perhaps every 6 months with your insurance provider. Did you have a life-changing event that occurred? Do your family and friends have any companies that they recommend? It's always good to know, who did you go through? When you had that claim, was it easy? What was the process? So it's really good to ask around. And also, do you have enough money in savings to cover the deductible? Do you know what the deductible is? So for life insurance, do you have enough life insurance for yourself, for your spouse, or for your kids? What does it cover? How long will it cover your family for? And will your family have enough coverage if you're no longer here? So you want to create an update in estate planning too, so things like your will and your trust. So it's really important that if you have a family, even if you don't have a family, it's just you yourself, it's important to have something documented so that way your family knows what to do if something happens. Tax preparation, you want to revisit your tax withholding if you have a hard time understanding what that is, or why you feel like you owe taxes every year. You might want to talk to your HR company or talk to a tax professional about it so they can explain a little bit more for you. If you're withholding a little too much throughout the year, they'll be able to tell you if you're not withholding enough to where you're owing taxes every year. So you want to review changes in dependents, income, and marital status. Did you get married? Do you want to go ahead and change that on your W-2s or W-4s? Did you have a baby? How would that affect your taxes? And what kind of documents you need for that? Compare your tax return from last year to estimate upcoming deductions, and have a plan if you owe taxes. If you do owe taxes, do you have money in your savings account to pay for that? Is this going to be your first year? Have you owed taxes for the last several years? Again, talk to a certified professional so that way they can help you determine if you're withholding too much or not withholding enough. Some of the documents you should gather, your last pay stub of the year. You can, use that to help determine your refund if you are getting a refund. Get information on your retirement account contributions, HSA and FSA independent care, FSA spending, and charitable contributions. Those are some of the documents you should have available to bring to your tax professional. Review your withholding. So withholding is an amount of federal and state tax taken out of each paycheck based on your W-4 form. It can be changed anytime throughout the year with your HR with your HR department. It helps avoid paying a large tax bill and ensures that your refund is correct. You may need to change your W-4 this year if you owe taxes last year, you received a large refund last year, changed filing status, and made more income last year. So you want to maximize your deductions. If you have questions on this, you're more than welcome to reach out to your, if you're working for Mayo, you can reach out to Fidelity and see if you, to your financial planning advisor to see if you have enough deduction, if you already took out enough deductions or if you need to take out more deductions, retirement deductions for the rest of the year. So for example, for 2025 standard deduction amounts is $13,850 for the single, for a single person, and $27,700 for married filing jointly, and $20,800 for head of household. Sorry, I didn't mean to say anything about retirement, but for deductions. So for tax purposes, you understand how much the standard deductions are for 2025. So you might want to talk to your tax professional about that to see what is the best way for you to do. Do you just want to do a standard deduction, or do you want to do like an itemized deduction on your taxes? So some of the more common itemized deductions would be if you have a lot of medical or dental expenses. You can include your mortgage interest deductions in there, your property taxes, you can include that as part of your deductions too, and charitable contributions, but also your student loans interest rate can be part of your deductions too. So make sure you bring all of that to your tax professional. They can help you determine whether the standard deduction is best for you or if you should do an itemized deduction. You want to max out your retirement contributions, so you want to contribute up to the IRS yearly limit for your account type. So for a 401k or 403b, if you're under 50, the maximum is $23,500. But if you're 50 and over, then the maximum for the year is $31,000. So you find that, you know what, I want to go ahead and just max out my 403b this year. If you're working for Mayo, you want to max out your 403b for the last month of the year. You might want to reach out to Fidelity or whomever, to Fidelity, and let them know. Just go ahead and just max out your 403b for the year. Or if you have an IRA, traditional or Roth IRA, you can, if you're under 50, the max contribution for 2025 is $7,000. And if you're over 50, the catch-up total amount is $8,000 for 2025. And then when it comes to budgeting, we want you to know your numbers, right? You want to audit your accounts to reduce lifestyle creep. This means that you evaluate your year's spending trends. Where's most of your money going to? What activities, is it going towards debt? Is it going towards travel? Just audit your accounts, just kind of know, just have a big picture, and kind of know where your money is going to, what your life is looking like financially. You want to gather your 2025 income, and then list out your living expenses, things like housing, transportation, groceries, trips and hobbies, debt, things like that, to put towards your, as part of your budgeting. So you want to see what your 2025 budget looks like, how you did, to prepare yourself on what kind of goals you want to set for yourself financially for 2026. So you want to identify your 2026 goals, things like, do I want to buy a house this year? Am I having a baby this, 2026? Do I need to set money aside for maternity leave? How does that work? Things like that. So try to figure out how much you actually need for 2026. What are some of the big life goals that you have? Most importantly, with a budget, you want to set something that you're able to stick to, and then kind of really determine the difference between wants and needs, right? If you spent 2025 traveling a lot, accruing a lot of debt on your credit card, then maybe 2026, you can make debt repayment as part of your number one goal too. So if you need help budgeting, I'll be more than happy to help you with that. So budgeting, again, always know where to start, right? So you always start with your income. This is just an example of the budget spreadsheet. It's free as part of that budget book that I have available for all of our members. So know where your income. This is just an example of a budget of a family of 4 here in Olmsted County. And you want to list out your expenses. Your fixed expenses includes like things like your mortgage, your student loans, car loans, things like that. Things that are due every month around the same time, around the same year. I mean, it's around the same amount, but around the same time of the month too. So those are your fixed expenses. Your variable expenses, of course, they're going to vary a little bit, but we still want to set a limit to that, right? So things like your groceries, they change from season to season. Right now it's the holiday season, so things are a little bit more expensive with groceries. Gas might be a little bit more expensive too because you're traveling a little bit more. Entertainment, you might be pouring a little bit more towards entertainment, things like that. But we always want you to kind of set money aside for different savings account too. So things like emergency savings, new tires, whatever your savings goal may be, you can put it towards savings. So this is part of like just a regular budget spreadsheet that I can help you with. And also, it's important to kind of know what you spent in 2025. Again, just have a big picture what your budget was like in 2025. So you can put down, again, this doesn't belong to anyone. So know your income for the month, how much you made for the month. What does that equal out to for the year? What is your year-to-date total? Know your bills, your mortgage. It may be $1,400 a month. What does that come out for the entire year? So it's really important that if you kind of want to see how, easy it will be for you to transition into 2026 with your new financial goals, you might want to see what your year was like in 2025 also, and see where you need to cut things out, certain expenses that you need to cut out, or things that you need to improve on. So it's really hard to kind of set up new goals if you don't know where you start in the first place. Again, this is part of the budget book spreadsheet that I can send out to you too. Another additional tools that we have, you can meet with me virtually or in person for ideas on how to better plan ahead for the year. So we can use, there's different tracking tools that you can have here at the credit union, where if you're like different payment alerts, different spending alerts, things like that, that you can track your finances with. And we always want you to know your credit score and review it annually. Again, that's a free service at annualcreditreport.com. And we want you to keep tabs of your expenses with services that we have available. Things like online and mobile banking, e-statements, automatic savings and transfers and bill pays. So it's really important that you determine, you look back in 2025, where do you have room for improvement? What do you want to achieve in 2026? And if you need help figuring that stuff out, you need help setting up numbers and how to, what to put aside per paycheck, you can talk to me, or you can, reach out to our phone center so that way they can get you in touch with me too. But again, this is my contact information. If you have any questions, you're more than welcome to reach out to me. So are there any questions online? No? Okay, perfect. Well, that's it. Thank you so much for joining us today, and hope everyone have a wonderful rest of the year. See you next year.